Well, it's time now for our 10 o'clock session, and I'm really happy to introduce Tim Sothern from BDO. Tim is going to lead a session and deal with some of the current issues related to financial reporting and governance issues in the not-for-profit world. This will include an overview of the Ontario Not-for-Profit Corporations Act, which was recently proclaimed into law. Welcome, Tim, and if you can just, I'm used to sitting at the other side of the audit table with you, but if you can just introduce yourself to everybody else, just give them a background of what you do. Welcome, and thanks for joining us.
Thanks, David. Despite me being an auditor, I am known as a nice guy, so it's okay for everyone.
I'll back him up on that.
Yes, and good morning to everyone. My name is Tim Sothern. I'm a partner with BDO Canada, and I have worked extensively with both privately held companies, but also not-for-profit organizations, and I view that as a bit of a specialty of my own. So it was a pleasure when a face from my past reached out to me to present to you today on a couple of matters with regards to governance, and they're kind of a little bit different. The first one I will be talking about, and as I start to share my screen here, is the Ontario Not-for-Profit Corporations Act. And while that seems like kind of a dry subject there, and in some essences it is, it's also a very important one. And the other one I want to talk about today, which is becoming an increasingly big governance issue, is the whole issue of fraud and what can happen within a festival or a not-for-profit organization with regards to fraud and fraud risk, and how you approach that from a governance perspective, and some of the things to really start to watch for, not only just internally, but now with regards to online fraud. So I believe everyone can see my screen. Dave, if that's all good, and I'll just proceed.
Yep, looks good. Thanks, Tim.
Okay, thank you. So the Ontario Not-for-Profit Corporations Act, ONCA, as it is known, is the epitome of seeing government in ultimate slow motion. This act was drafted and presented to Queen's Park in 2010, and we were all getting ready for it to be implemented, and we kept hearing next month, next quarter, next year, and here we are in 2021, and the act was officially proclaimed into law on October 19th, 2021. So probably a new record for the government, but it took them 11 years from the legislation that was presented to Parliament to actually officially pass it into law. There was many different reasons for that, but I think a lot of it related to the fact that the government was developing an online corporations registry that took a long time to complete, and they wanted to synchronize the proclamation of this act with their online registry, which just came into place in the fall. So it applies to all on Ontario corporations without share capital automatically upon proclamation. And it really has a lot to do with the overall bylaws and letters patent and articles of incorporation that each not-for-profit entity might have. And what is essentially happening right now is you've got a kind of a 3-year grace period to get your house in order as it comes with your bylaws and your founding articles. Now your corporation isn't going to be dissolved if you don't do anything in 3 years, but after 3 years, your governing documents are going to be deemed by the government to be amended to comply with the new act. So It's really important if you have a corporation set up as far as being a not-for-profit, that you take this next time to deal with your legal counsel and make sure that all of your articles and bylaws are amended to comply with the new act. And I'm going to talk a little bit about some of the key items and processes that you're going to need to go through just as part of this discussion today. So there is a transition process whereby you adopt articles of amendment. So every corporation that is set up in Ontario has what's essentially called a letters patent or articles of incorporation, which basically is kind of like the constitution of your organization. Then beyond that, you're going to have bylaws, which kind of consist of the legislation related to your constitution of your organization. And both of those are going to need to be updated and amended to comply with certain aspects of the Ontario Not-for-Profit Corporations Act. And as I mentioned, we've got 3 years. The clock has been running since October of 2021, but we have 3 years to get into compliance with the Act. So there's going to be three different types of rules that essentially that come with the Act. One is a mandatory set that can't be overridden. There's also default rules where bylaws and articles can override, and there are certain alternate or optional rules that an organization can adopt at its discretion. And again, I operate in the accounting and audit field, so I'm not a legal counsel. So having a discussion with a corporate lawyer that's familiar with the not-for-profit sector is going to be a good one when you're actually dealing with the specifics of your bylaws and articles. So, steps to transition. What do you do in the next 3 years? The first thing is to collect your governing documents. And if many of you are kind of like some of maybe the not-for-profit clients I have, especially the smaller ones, that may be just in itself a challenge because boards change over. The founders may be gone from your organization, and who actually has those original documents. So it's important to kind of collect those and gather them up. And again, the original articles, your bylaws, etc. So you gather those up, and then you have to go through a review of them and compare to what is in the ONCA, and study the key features of the ONCA and see if that aligns or does not align with your governing documents. And again, you're really going to need the assistance of a lawyer to help with this, or certainly if you have any lawyers on your boards, etc., it would be good to tap into their knowledge on that. So once you've on the left side of the ledger, you've got your original documents. You now know what ONCA has on the right side. You compare the two, and then what happens is you prepare articles of amendment for any changes that need to be made to your governing documents, and then you're going to also prepare ONCA compliant bylaws. So again, looking at that legislation or the bylaws that govern your entity and making sure that they're also compliant. Finally, once you've gotten those articles prepared and approved by your board, then they get filed and approved with the Ministry of Consumer Corporate Affairs, and those now can get get filed in a more streamlined fashion through an online registry process. But again, I highly recommend that you consult with a lawyer that's familiar with not-for-profit activities while you do that. So what is in ONCA? What are some of the biggest changes? I would say some of the bigger changes that we see is the incorporation process first for a new not-for-profit corporation, at least in government speak, is deemed to be more efficient. That will remain to be seen as we go through. I know there's still a lot of questions that folks have with regards to this new online process. But having a new, easier incorporation process would be certainly welcome. Now, a big thing in the ONCA is a distinction between a classification of not-for-profits called public benefit corporations and other not-for-profit corporations. So a public benefit corporation is a charitable, so it could be a registered charity or a non-charity that receives more than $10,000 per year in either donations or gifts from people who are not members, directors, officers, or employees of the corporation, or which will be very much applicable to a lot of the audience here, grants or similar financial assistance from federal, provincial, or municipal governments or government agencies. So again, if you get $10,000 or more in that kind of funding, you're automatically looped into being a public benefit corporation, which I would expect most of the entities that are represented on this call will probably fall into. So it's just important to note that. It allows a not-for-profit corporation as well, this new legislation, to provide in its bylaws means of voting by mail, telephone, or electronic means, in addition to or in place of voting by proxy. So the old system where you get if a member cannot attend a meeting, and they get they give a signed proxy to a friend or colleague, etc., to represent them at the meeting and vote on their behalf. There are now other means that are going to be allowed in legislation for that individual to cast their vote without necessarily being at the meeting. And obviously, with the world operating over the last 2 years in a virtual environment, that is probably more timely and more beneficial than it was even contemplated back when the legislation was drafted in 2010. It also allows a member of a corporation to appoint a proxy holder, but again, the articles or the bylaws of the corporation have to permit it. So that's one of those alternative rules that needs to be noted in your governing documents with regards to that. So that's some of the first key areas, but there are more. This is another big one, and this is going to be I'm going to find this next point to be an area of that's going to be an area of confusion with regards to not-for-profit corporations. It clarifies, the Provincial Act clarifies that not-for-profit corporations can engage in commercial activities if those activities support their purpose or their objects. So that means things they put it in the they put an example on their website of selling T-shirts or other kind of swag or other kind of fundraising that goes in to help say defray costs from running your festival. And the corporations the ONCA says that's just fine. But the other issue that goes into that is that does not necessarily align with that may not necessarily align with the people with the group that really matters on this, and that's CRA and the Income Tax Act, which basically does provide some restrictions with regards to a not-for-profit or a charity operating commercial activities and still claiming a tax exempt status. And probably over the last couple of years, CRA's not done a lot of attacking on not-for-profits because it's obviously not been the time or place to kind of hit someone when they're down. But needless to say, I think CRA will be on the lookout for any amount of money it can raise over the next few years. So commercial activities, while allowed under the Ontario Act, CRA could come in and simply override it and say, hey, we think you're operating as a business, not as a not-for-profit, depending on the activities and the level. Everything is dependent on circumstances, but CRA could come in and say that's a business. We will tax you on that because you're essentially operating as a business outside of the not-for-profit world, and that's again an issue that I've run into with some clients. It doesn't happen that often, but when it does, it's usually some pretty substantial dollars that we could be talking about with regards to CRA. But it's at least comforting to know that some of the legislation as it relates to Ontario is going to allow more freedom for not-for-profits to raise dollars through what we would call kind of commercial means. Okay. Also, with regards to the process for reviewing financial records, that type of thing. So many organizations, many of you maybe on the call, have been subjected to what's called an audit, and the audit, as you all will know, and as I'm aware as an engagement partner on audits, they are expensive, time-consuming type processes. But oftentimes we're required under the old Corporations Act for at a certain level of revenue. The new ONCA is allowing for essentially what is called a downgrade, a middle engagement called a review engagement. And when I'm kind of through this, I can kind of give you the thresholds with regards to that. But whether you're allowed to have a review engagement or you're required to have an audit will depend on two things: whether you're a public benefit corporation and what is the size of your revenues. And essentially that major threshold is about $500,000. So if you're below $500,000, you'll have the option to get financial statements kind of prepared at a less intrusive basis than an audit and a cheaper basis than an audit, versus always being required to have an audit done of your books and records. So again, that is something that is very new within this particular legislation. So essentially, for public benefit corporations, it's looking at about a $500,000 level. So again, I can go over that if we have specific questions on that piece. Other key key items in the ONCA goes around requiring corporations that have 2 or more classes or groups of members to set this out in the articles, so in the Constitution versus in the bylaws or the legislation. Again, more of a legal nuance, but again, and that's they want to be clear. One of the big things about this is they want to be much more clear and transparent with regards to the not-for-profit corporations' ability, basically voting system. How do the members determine key decisions, and who has the right to vote? It also, the ONCA also provides a statutory duty of care for directors, which requires them to act honestly and in good faith with a view to the best interest of the corporation. Basically all directors are required to carry out a fiduciary duty to the organization and act in its best interest. But the ONCA puts more legal teeth behind that. And it's important to understand that as a director when you come on to these things. There's always good intents to come on as a director, but there is more onus on directors to provide effective oversight of what is happening within their organization. So just something to be forewarned as a director. And it sets out a due diligence and good faith reliance defense for directors. A director will not be legally liable in certain circumstances if they acted with care, diligence, and skill that a reasonably careful person would have acted in the similar circumstances. But the trick here is that's a pretty broad definition, and it's going to be up to the courts to sort out what the legislation actually means with regards to care and diligence and skill. So it's not an automatic just, I was told by management this was what it was, and therefore I went with that. They're going to the question, if something really went badly and something really went south, that the board took good care and diligence and skill of a reasonably careful person to check over what has been happening, what was happening in that particular circumstances. So everything always is about facts and circumstances with regards to this particular portion of the act. As well, it lists specific requirements for directors and officers to report a conflict of interest in certain circumstances. That's always should be part of a good governance process. Most organizations, quite a few organizations, will have as part of their board agenda to declare any conflicts of interest among the directors. This is especially important when organizations are outsourcing their to vendors, and if those vendors are necessarily connected to a director, then you have a potential conflict of interest with that director, and those need to be stated and dealt with. They also states that corporations do not always have to include a member's proposal in meeting notices in certain circumstances. It provides members with actions they can take if they believe directors are not acting in the best interest of the corporation. So again, some opportunity for members to present their issues if they believe directors are not acting in good faith. Provides members with greater access to financial records. And so financial transparency is also going to be part of this. And as I mentioned before, it streamlines incorporation if you're a charitable corporation, so it no longer requires that the Office of Public Guardian and Trustee sign off on an incorporation. However, the applications, with regards to becoming a registered charity, again, that's the feds, and your normal wait time on if you want it to become a charity is still probably 12 to 18 months, and that's the critical one to get if you want to become a charity. So some of these things in the ONCA, they're all very nice and well and said, but you still have to rely on the feds to get you the key approvals with regards to registered charity status. And all applications for articles of incorporation can now be submitted directly to Service Ontario. And the ONCA joins other jurisdictions in Canada, other provinces essentially, that have modernized their not-for-profit corporation laws. As I said, it only took them about 11 years, but they got there basically to do that. So that's a key walkthrough with regards to the ONCA of the highlights. There is a lot more deeper into this particular issue, but that again, you're going to need to deal with, again, a corporate lawyer, someone familiar with not-for-profit corporations, to do a review of your bylaws and articles to make sure that you're compliant. But again, you've got time. That's the good thing about this, to get things at. And I was at an AGM on the weekend, a virtual AGM, and that organization went through and amended all of their bylaws essentially to be ONCA compliant. And they had about 3 or 4 changes that needed to be voted on by the members to do that, and that was a sports organization. So starting to happen slowly but surely. So I think we'll have some time afterwards, and I can talk a little bit about that, or try to answer any specific questions as much as I can, for not being a lawyer, because there will be a lot of legal aspects to this. So moving on to something that's kind of almost polar opposite in terms of, we were talking about legislative actions. If from a governance perspective on a not-for-profit organization, probably the scariest thing as a board member you could ever come across is you've found out that your organization's been subject to a fraud. And that's scary on many different levels as a director. One is the actual financial risk. How serious was the fraud? And is it actually something that could put you in some sort of financial peril? You also have reputational risk. And I think we've all saw various cases, even in the last 2 or 3 years, that have been in the public space with regards to sports organizations that have had either directors, treasurers, or staff as financial peoples perpetrate fraud. And the reputational risk and hit that gives to an organization, that intangible damage is really hard to measure, both from trying to attract volunteers and also just the overall morale that hits an organization when they know they've been subjected to a fraud. And the third thing is just the whole director risk. I finished talking about the ONCA and the fact that of directors, did they take due care in terms of the financial management of the organization? Did they understand where there were risks for fraud? And so that's a critical area as a board member that you want to kind of address with your management team. If you're subject to an audit, you want to address it with your auditor as well. So I want to talk about what I've seen in my experience and what some of my colleagues have seen in not-for-profit organizations, what we see as the key problem areas. The first one, and by far the biggest one, is a lack of, and probably all three of these are intertwined, but there's a lack of segregation of duties in the finance area. We're all dealing, some of you are dealing with grassroots organizations. You're operating on a, necessarily a shoestring budget, but it's certainly a tight budget. If I'm your auditor, I want you to have 3 or 4 people in your accounting area. 3 or 4 people cost a lot of money, and it's just not realistic. But when you have one person, say, in your accounting area, and you don't have necessarily an oversight function on that person, well, one person now has custody of dollars and also custody of the accounting records. And when you have that, now you're starting to develop a fraud stew, essentially, where you have both the if you have someone there, they have the ability to not only manipulate records, but have access to the assets of the organization. If you have those two things combined, you have a recipe for fraud. And so a lack of those segregation of duties is a key area. And then from both the board or perhaps the senior manager perspective, there's maybe a lack of financial knowledge. Where there's a lack of knowledge, there's a lack of oversight. And I've seen it as boards I've been part of, and I've seen it as boards where I'm the audit partner, where when it comes to maybe present the financial information, everybody turns their head, say, to the treasurer. There might be one person on the board that has some pretty good financial knowledge. Everybody turns their head to the treasurer and basically says, is everything okay? And if the treasurer gives the thumbs up, the board votes to pass. And that is actually, fairly weak controls when it comes to fraud risk. And so it's important as board members, it's important as senior management that everyone has proper financial training. You don't have to be a CPA, but you have to know your way around a balance sheet. You have to know your way around an income statement and a budget, and you should know your way around a bank reconciliation. Because I tell you, about 75% of the fraud perpetrated is probably with accounting people messing with the bank reconciliation. And that's a key area where individuals can perpetrate fraud. So, what is the responsibility of a board member to mitigate fraud? There's really 3. The first is actually setting the tone, and you'll often hear this expression, the tone at the top. If the tone at the top is, you guys look after the finances, just tell me everything's okay, you're not setting the proper tone for ethical and fiduciary practices. And then that's going to trickle down to the organization. Well, if the board doesn't care, it's okay if I make a mistake. Maybe okay if I siphon off, because maybe they're not paying me enough. Maybe I'll siphon off a few $100s, and feel that I'm getting kind of just reward. And a fraudster, most people don't go into a role to perpetrate a fraud. They don't go into it with preconceived notions that they're going to do it. But when given the opportunity, when given the motive, and the motive often being financial troubles or financial difficulties, that's when you are actually set up to have fraud occur. So setting that important tone at the top is important. And not only do you set up the tone at the top, the board must also make sure that there are policies and procedures in place to prevent fraud. So talking with management, or if there's not a lot of management involved, the board must set out some of those policies. That could include items, such as check signing procedures. Well, now also we have online banking that has kind of taken over and certainly become more the norm as we come through the pandemic than it was in the past. So what are your procedures to make sure that that online transactions are properly approved and properly scrutinized? As well, the third item here is just approvals and accountability. Again, board members are responsible for actions carried out, and you saw that with regards to the ONCA. What would a reasonable person do? And as a board member, you need to be very cognizant of that fact. So I mentioned one of the areas in terms of cash handling, but here is what we would view at BDO as the top six areas in terms of managing risk and fraud within an organization. All right, minimization of handling of cash. Not as big of a deal these days because of electronic transactions, but running festivals, where if we're gonna start re-entering the phase where individuals are coming and making purchases with cash, how is that cash handling handled? And good pointers with regards to that is having a separate person record the cash, a separate person handle the cash in terms of deposit, and comparing those items when the time has come to reconcile. As well, if your organization has a credit card, I've seen personally with a couple of clients instances where fraud has been committed by using credit cards to make personal purchases. We always consider it a key risk area when we're going into an audit. So we'll actually specifically test credit card transactions among key employees. But that should also be happening at the board or management level. You don't review statements. You actually review individual receipts, and you're looking for purchases that are off, because a fraudster will use a vendor that is the same vendor that the organization uses. Let's say it's I saw a Rib Fest, right? And you're purchasing food product. Well, a fraudster will go in and purchase food product for themselves and dump it into the wash, essentially. So you need to make sure that those are authorized transactions and that you're monitoring those. As well, expense reports may be another place where fraudulent activity could happen, and it's very important that expense reports are scrutinized by management, and that management's expense reports are scrutinized by the board. Not just signing the check, but actually reviewing the report and the support that goes behind that. As well, payroll. And where I talked about segregation of duties, this is where payroll fraud can happen. If you have one person that's responsible for payroll, for inputting the payroll, checking the payroll, and then putting it into for processing, that one person could be manipulating payroll. I've saw and heard instances in the past where payroll person with one an organization with one payroll, that person paid themselves bonuses and didn't pay themselves a lot, but they paid extra every time, so it never got noticed, and really only got caught when they went on vacation. And that's also another telltale sign of of a fraudster, is somebody who refuses to take vacation. They don't want to take vacation because if somebody else steps into the role, they're going to maybe possibly discover their fraud. Another telltale sign is someone living above their means. And that is also something that, you kind of keep an eye on. I talked a little bit about online transactions. You have to limit the number of people with approvals and the abilities to make those transactions. And those transactions need to be approved before, and they need to be monitored after, to make sure that controls are and policies are in place and operating at every step. And finally, check signing. I have been actually in board meetings where the treasurer is handed a stack of checks to sign, and they sign them. And I'm kind of watching. They're not really looking at anything. They're just signing, getting it off their plate. They need to be signing as well as the check, the backup, so that they've shown that they've scrutinized what that check is about. Second signatures are always good, again, for scrutinization. Don't think, though, that the banks are checking for those for second signatures, because they're not. That's really more of an internal control than a banking control. So it's very important to have those types of policies and procedures in place with regards to check signing itself, because again, it's an easy thing to just sign checks and never ever pre-sign checks. That is a huge audit no-no, and I know it's done for convenience, but it should never happen, and it will put the board at risk if board members are signing off on checks ahead of time in terms of your fiduciary duties. So, what do board members keep in mind? Board members need to know what is going on in the organization at all times. They don't have to be in the weeds, but they have to know at a high level what is happening. And as long as there is consistent oversight, there's more control. Regular procedural reviews at a board level, with good budgeting and good reporting on budgeting, and knowing knowing that management has implemented internal controls should be top of mind. Those should be the questions that are asked, and you can ask those questions whether you have financial knowledge or not. What are our controls around cash? What are our controls around expenses? And getting good explanations with regards to your reviews of financial statements. You don't have to be a financial expert to notice if something is really off budget, and if you're not getting provided with clear explanations, as a board member, management is accountable to you to provide those explanations. So, if you're big enough as an organization, you consider the benefits of setting up an audit committee. And often what boards will do is set up an audit committee, and they'll bring in experts to sit on that audit committee, even if they're not members of the board, but to provide that audit committee with the expertise to be able to deal with, say, a person like me as a financial auditor, to be able to deal with the management. Again, audit committees probably really in some of the larger organizations. But in the smaller organizations, trying to bring in some sort of expertise that has some financial expertise as a third pair of eyes. And always thinking about new ways that where fraud can creep into your organization. And I'm just going to talk briefly about the next big thing with regards to fraud, and that's cyber. And it can be simple things like phishing emails, where I get an email from Dave McNeil saying to authorize a wire transfer or an electronic transaction, and I think it came from Dave. I go merrily along and I do that. It didn't come from Dave. It came from a fraudster, and these things can be um, highly sophisticated. We had an organization in Waterloo Region, a for-profit, that lost over $2 million as a result of one of those phishing emails, where they thought the CEO had authorized a transaction, they wired the money, and that money was gone. So it was a big deal. So watching for those fraudster opportunities through phishing, online transactions, social media, getting training on what that kind of looks like is important. And then again, for larger organizations, I'm not going to spend a lot of time on this, is looking at how your systems could be attacked. One of the big things is fraudsters hacking into your system, freezing your accounting records, holding them essentially ransom or hostage, and until you pay them in Bitcoin, they won't release any of the data. And I will tell you, in about 90% of those circumstances, organizations pay those fraudsters because the cost of losing the data is far more than the cost to pay them off, which means you need to make sure, especially if you're a large organization, that you have checked your systems and you've done a vulnerability assessment and a penetration tests. And again, cybersecurity protection. Do you have data protection and privacy? The privacy legislation, the PIPEDA legislation is huge. So, and we know the reputational risk that happens when an organization loses has a breach on privacy. Again, making sure that there's cybersecurity awareness training, making sure you know what happens if you have an incident, and also ensuring, again, if you're large enough, that you've got proper cybersecurity protections in place. It is going to be the new way of, its current way, but it's going to be a more advanced way of committing fraud to an organization, where somebody just can hack in and start manipulating things. So it's important for a board to be asking those types of questions. So I feel that I'm getting a little dry in the throat. I think I've come to kind of the end of my presentation, but I'd be happy to take any types of questions on those two areas. I know I buzzed by a lot of content in a short amount of time, so happy to try to answer questions where I can.
Well, thanks very much, Tim. I've got a few questions for you, but we've got three in our question and answer, so I'm gonna ask those first to make sure they get answered. And the first one comes from Marnie Lapierre. If the CRA deems the organization as a for-profit after years of operating as a not-for-profit and receiving grants, should there be discussion about changes regarding eligibility criteria for government grants?
Yeah, I don't think you're ever going to have to worry about the government grant side, where CRA would come in and say, oh, you got this government grant, that's taxable. That is not necessarily the worry, because those government grants are very documented, and they go towards your not-for-profit purpose. Where CRA is going to attack is if you're doing commercial level activities. And Dave, I'll use Oktoberfest as an example, right? Oktoberfest had a store. right? With sold merchandise, those types of things, right? You could go in there and get your dirndl and get your hats and those kind of things. Well, CRA could have maybe made an argument that's saying, well, that's not really Oktoberfest. That's a retail operation, and should we be taxing you on any of those sales? No, they never did that in terms of the actual levels, but that's an example of where they might go on the attack if you're starting to operate as a business.
Okay, we've got a next question here from Christine Kane, and it's, as a not-for-profit, is selling beer, wine considered commercial activities, and how would it affect tax exempt status?
It could be, depending on on the volume and how that relates. But if it's also an integral part of your objects of carrying out a festival, um, most likely that should be okay. Again, CRA is going to come in where they're deeming. The other thing I should mention, when they come in, they're usually looking at if the organization is running substantial types of surpluses. And so if you're running surpluses and you're also operating a business, those two things are going to attract the CRA's attention. I had a student union that was very concerned of that, and they parceled off some of their business activities, which included some restaurants and those types of things and bars, and put them into a for-profit organization, just because one of their compatriots in the Toronto area got attacked on that same issue by CRA. So it's all facts and circumstances, Dave. It's hard to say on a particular issue what will get CRA kind of in your kitchen, so to speak. But I would say if it's normal part of your overall objects, it's probably fine. But if you've migrated into some sort of a side business to help fund the not-for-profit, that's where there's a little bit more risk.
This next question from Patricia Bellew kind of stays in the same area, but what about a Habitat retail sale store? Would that be a concern?
Yeah, we have one of those just down the street from where I live, and most of the times I think that particular example probably aligns more with Habitat's overall mission and objects, and because it's it's home repairs, it's those types of things. I don't think that's probably as much of a concern. I think a Habitat for Humanity, given it's a national organization, has probably done their homework with CRA on that type of a thing. Now, if they went off and again started a restaurant or something kind of clearly outside of their normal operating activities, that's maybe where there's going to be a bit more of a risk. But I would not have any severe concerns on the resale side for Habitat.
This one comes from the Paris Agricultural Society. If we have a charitable status, do we still have to be ONCA compliant?
That is correct. You would still need to be ONCA compliant. You are, as long as you're provincially incorporated. There's also, you can also be federally incorporated, but there is also the Canadian Not-for-Profits Corporation Act, which came in about 4 or 5 years ago, and you have to align with that. So yes, you still need to be compliant with ONCA with regards to your corporation status. And then on the charity side, you need to be compliant with all the rules and regulations that go with being a registered charity.
And the last question in our chat comes from Patricia Silver, and it's, would selling CDs post-concert be considered a commercial activity?
Oh, and I assume that basically their main objects is running a concert and music festival. Is that right? I would say that aligns very closely with your objects, and I would say that would not be that would not be an area where I would lose a lot of sleep over that. I would not lose a lot of sleep. So
now, Tim, the one thing I wanted to clarify with you, and I hear a lot of discussions both ways on it, but a lot of not-for-profit CEOs or boards believe that at the end of the day, you have to have a zero profit. And I know lots of boards that come year end are just going on a spending spree because they don't want to show revenue on their lines.
Yeah.
There's a certain threshold that you can carry over a contingency. You don't have to be a zero-sum game all the time. Is that correct?
That is absolutely correct. And frankly, it's kind of dangerous to operate that way, Dave, because I used to always talk about when that disaster could fall. And then sure enough, in March 2020, a disaster fell. And if an organization doesn't have enough in reserve, it may not survive the disaster. So a rule of thumb, this is not CRA approved, but it's generally out there. If you're keeping a reserve of 6 to 12 months of your annual operating expenditures, you're not going to really start raising any eyebrows with the CRA. So, and it's really advisable to have that in kind of reserve. When you start going beyond that, then you need to be worried about, okay, well, any reserves above that, maybe now we need to be at least designating them for specific purposes, even if it's going to happen, a capital project, a expansion opportunity, those types of things. But no, definitely, I always advise clients they need to have some level of reserve tucked away for that rainy day or that pandemic that we didn't see coming, right?
And you touched on a couple other points, and I just wanted to share because I think a lot of our members would be in the same position. We're a staff of 4 people here, so having 3 people in accounting departments, kind of unrealistic, like you said. But what we've done is we've hired an outside bookkeeping.
Yep.
And it's BDO. We do BDO, does our audit and does our bookkeeping. And believe me, they're both totally separate.
Yes.
But is that a good source that you've got a check and balance in there to make sure that at least your ledgers and everything are correct?
Yes, from the accounting side, that works. It still doesn't alleviate you from making sure that you still have proper controls over authorization of purchases, authorization of payroll, those types of things. Even an outside bookkeeper can't. All they're doing is keeping the score. Over on your side, you're generating the goals, and you need to have essentially the controls in place at that level to making sure that the purchases are properly authorized, any cash handling is properly documented, those types of things. But having that outside firm, I'm not advertising for BDO, but any outside accountant, that what you're doing there, Dave, is you're segregating the bookkeeping from the asset custody, and that anytime you do that is that's a good procedure to have in place.
The other thing that I've always done on any boards I've been involved with is to make sure that your financial person is a CPA. And the other thing is, and I've seen this, some people run into troubles with that, is the not-for-profit world is different from the for-profit world. So when you mix those two up and you think, okay, well, Charlie over here is a CEO, owns several successful businesses, but he's playing under a whole set of different rules.
Yeah, accounting is accounting, but translating a for-profit environment over to a nonprofit is, I'll say it, a real culture shift for say someone who's a CEO or a CFO of a corporation where they're designed there to make profit and deal with that. But the idea of controls is universal. And the same controls apply in a not-for-profit as they might apply in a for-profit, Dave. So it's some of those skills are transferable across. Others would need to be learned, especially with the specific nuances of an NPO.
Well, Tim, you know, it was a lot of great information. We thank you very much for the information provided. Hopefully the deck will be available that we can pass on if people are.
Yeah, absolutely. We just have to find a way to properly transfer it to you.
If
That
you can
isn't
get it
via
to us,
email.
we'll be able to get it out. So that's great.
Super.
Yeah, you know,
Yeah.
thanks, Tim, to you and to BDO. They've been a great partner of ours for a long time. And, you know, I appreciate everything you've done for me over the years and helping me figure out this whole not-for-profit landscape. It's been quite a journey.
Well,
So thanks,
it's been my pleasure, and I wish you the best for the remainder of the conference.